Well, First Minister, there's no shortage of bad news on the German economy. Even this week, we've seen the IMF downgrade for this year. We've seen the economy shrinking for a second year as well. Bundesbank says stagnation risk also abounds. How bleak is the growth outlook in your view?
Well, it's a call to action in my view. Germany has been losing competitiveness for a decade now, and we have to make bold decisions this fall. My focus is on the supply side of our economy, which means labor market, bureaucratic burden, corporate tax and energy prices. And we have already presented a package, a growth initiative, which we are working on. But I think we need even more ambition to bring Germany's economy back on track.
Do you think you're confronted with an economic emergency?
Not an emergency. If you look at the development over the last years, it's no surprise. But now we see the results. Even if you look at the labor market, now you see the economic downturn there. And for me, this is call to action. A wake-up call to look at all obstacles for better economic development, and we have started in government, but we want and we need to go even further.
I've got to say, out of the senior politicians, the economists, the senior bank executives I've spoken to, they're concerned about trade fragmentation, geopolitics.
Yeah.
But the other third big concern is Germany. Many are very worried about where the economy goes from here. Are you operating in an economic straitjacket with the debt brake? Is it time to think about stepping away from that measure?
No, our problems are not based on the debt brake of our constitution. Actually, we are spending very much, but too much for our welfare system and too much in consequence for illegal migration into our welfare system. And so it's not about to spend more, but better. We have to shift in our budget. And well, if you look at the fiscal rules of the European Union, we have to respect them. Germany has to give others an example, and the fiscal rules of the European Union, they limit our public expenditures. So our responsibility is to invest more in infrastructure, to organize a corporate tax reform, given the circumstances of debt brake and European fiscal rules. And this is will only be possible if we change the priorities in our policies.
One economist put it to me this way, saying, look, for every piece of investment that you make, it is going into replacing old energy infrastructure. You're simply replacing old with new. There is no investment that actually is going to bring any productivity gains for the economy for decades and decades. That is a very dire situation. So how creative do you need to get from here to ensure there is more public investment that brings productivity?
I do not share that view. At least not completely. We are investing, for example, in transportation infrastructure, in the digital infrastructure, at an all-time high. We are investing at an all-time high. But in fact, we have very ambitious aims in climate action. Actually, Germany wants to be climate neutral by 2045. European Union 2050. And I'm open to reconsider whether we should go back to the European 2050 perspective. Why? This would allow us to invest more in other sectors, and it would allow private businesses to use technologies longer instead of replacing them only due to climate action. And so it's part of a reconsidering process of our energy and climate action policies. And I think it's important to do so.
As you zoom out, I think many will still say, why don't you tackle the debt brake? This is something that politicians say to us, look, it's just crazy. Why operate with this type of rule, which was maybe fit for purpose on the back of the global financial crisis? But even before you've gone into an economic trough, economists have been debating whether it was fit for purpose. Has it passed its use-by date, and does it need some tweaking?
As I have already said, we have to respect the European fiscal rules. The European fiscal rules are in some cases and scenarios even stricter than our constitutional debt brake. So all who wants to make recommendations to overcome the debt brake have to take into account the European level. And it's a serious recommendation that Germany should ignore European fiscal rules. This is not good advice. We have to be an example for strengthening the economy by supply-side measures. You can make economy stronger without spending only €1 of taxpayer money by changing the framework, improving the framework conditions. And on the other hand, we have to respect the European fiscal rules. Because, well, if we wouldn't, it were an invitation. I have to be very diplomatic. If we wouldn't, it were an invitation for others to ignore the fiscal rules as well. Germany may be fiscally could, others not.
The timing issue seems to be important here. Time is of the essence, because if we look at your finances, the weak economy is now eroding the finances further. So tax revenues to fall more than 58 billion euros short of the 5 years to 2028. So if these supply side changes don't come through quickly enough, then the pie shrinks even more, doesn't it?
I really do not ignore the situation. Please do not misunderstand me. But the German economy is still strong. We have the SMEs of the Mittelstand. We have a very innovative industry. We have qualified workforce. We are well capitalized. There is much intellectual property. So there is potential for a fast comeback. And Germany had always comebacks, and so it will be the case now. But we have to do our homework. Of course, after more than a decade of not improving framework conditions, we have to come back to structural reforms. And then there will be quite fast the potential of really a turnaround of the economy.
To me, that's very selective to single out the medium-sized companies when some big businesses.
The industry as well.
But big businesses are retreating. Volkswagen looking at shrinking its footprint in Germany, its home market. Intel shelving plans for a major plant. You had Wolfspeed dropping its plans for a chip plant. Are big businesses wrong-footed here in their retreat from Germany?
Well, I cannot comment on business decisions, but it appears to me that Volkswagen, Wolfspeed and Intel are not only suffering from framework conditions of the German economy, but from their own decisions they have made before.
Let me ask you about using the single market, because that's been a big theme for every European country here.
Course.
The Draghi report, letter recommendations, let's think about changing tactics here in Europe. But last time we spoke, you were not a big fan of joint investments in European projects.
No.
Is it time to park some of those obstacles, think beyond just your own internal border?
Well, everyone is reading the Draghi report in the own style and looking, well, what can underscore my argumentation. But if you have a holistic approach to the Draghi report and what has to be done, I think there is one priority, making progress in capital markets union. Our competitive disadvantage, Europe compared to the US, is the lack of a capital market. And so we have to make further efforts to see progress there. We have already a roadmap, and we are standing ready for even more ambition to see results there. Then Draghi mentions regulatory burden, including Solvency II, for example, and I could not agree more. We have to work on red tape and the regulation. I once spoke to a senior decision maker of the US economy, a CEO of a tech company, and she said to me, well, the difference between the European Union and the US is the following. We want to innovate technology, you want to regulate technology. And I think this is the essence of the Draghi report. The mutualization of debt, I'm still not a fan of. For me, Next Generation EU has not yet proven to bring Europe ahead. I think all what was expected from it has not yet been delivered, and so I do not see the need to follow that example on a broader sense.
What is the point of CMU if you stand in opposition to any consolidation cross-border, the likes of Commerzbank with UniCredit? Because
I'm sorry. We have to differentiate between Capital Markets Union and Banking Union. And I see a banking union as a fruitful political concept, but still we have the state-bank nexus, so that banks and their home market sovereign assets are too close connected, and we need in first instance, to reduce the risk, and then we can make further steps in banking union. Capital Markets Union is different. It's about financing, innovation, financing startups and scale-ups, providing new products to the retail customers, and there we can see progress very fast. Securitization markets, more cooperation of the supervision, a common European retail investment product. So I think the roadmap is quite ambitious.
But bigger banks are part of a main financing arm in terms of providing a backbone to all of these companies we're talking about. What are your objections to these two companies consolidating from here? Because bigger banks surely are good for Europe.
This is a decision others have to make, the management. It's a market process I cannot comment on. The situation of the shareholder Bundesrepublik Deutschland is the following. We are convinced of the strategy of independence of Commerzbank, and this is why at the moment we won't sell anymore.
Let me ask you about some of the big issues here. It is trade fragmentation, It's geopolitics, we're on the eve of a US election. How concerned are you that trade frictions grow from here on the back of any US election, but also that we are still battling escalating conflicts in Ukraine and also the Middle East?
I'm very concerned. Fragmentation in consequence of sanctions against Russia, okay. Fragmentation, marked entry hurdles because of critical infrastructure, I think this is acceptable. But general fragmentation of the division of labor, for example, tariff conflicts, this is not good advice. A trade controversy sees never winners, only losers. And the elephant in the room is the policy perspective in case of a Trump administration. In that case, we need diplomatic efforts to convince whoever enters the White House that it's not in the best interest of the US to have a trade conflict with the European Union. We would have to consider retaliation. And the problem of the US trade relationship is not European Union, it's China. And European Union should not become a negative side effect of US-Chinese controversy.
Minister, thank you very much for your time.
Thank you very much.